Hello everyone. This is the pre-market report video for today, 5th Jan 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Last night, before the US market opening, there were two macroeconomic data was released and both of them were not particularly favorable for the US market. First, ADP National Employment Report, which is a private company, measures the number of non-farm jobs added based on their addition of the payroll database that they collect across over their 4 lakhs business clients. And the very important official US government report is due out tonight. Usually, market consider this ADP report as a preliminary one. Anyway, according to the report, the number of jobs added in December month was increased by 1,64,000, which was higher than the expected job addition of 1,15,000. This is a good news for the job market, but it also increased the fears that Fed may not cut the interest rate in the upcoming March month. Then the second one was service PMI data. We know the manufacturing was contracted. From the stock market perspective, it was mild positive. However, for the whole US economy, manufacturing contributed only for 19%. The remaining 80% contributed by service sector. So, always in US, service sector is the driver, whereas for China, it's more of the manufacturing. Back to yesterday, as per S&P Global, the service sector expanded more than expected and 0.7% higher compared to November month. So clearly both these macros was not what market wanted, which in turn increased the 10-year bond yield to over 4%. We know, and even on last Wednesday the same thing happened. 10-year bond yield increased and it crashed our Indian IT stocks and US future market. So 10-year bond yield increase is always against the tech stocks. Hence, yesterday Nasdaq was the one that got affected most and closed negative for the 4th consecutive day. However, US banking stocks were really positive as Bank of America's global research team released the report that in the next week earnings release, they expect US banks to post strong growth to some extent, which supported Dow Jones. Hence, it closed flat to positive, whereas others S&P 500 was down by 0.34% and Nasdaq was down by 0.56%. However, VIX haven't changed much, it's still the same 14. In case of tech stocks, again for the third straight day, another brokerage downgraded Apple and hence again last night it dropped over 1%. About oil, finally it got a quiet day. Because of the recent rally, it got some profit booking. At the time of this video, WTI crude oil is trading around $72.5 US per barrel and Brent crude is around $78 US per barrel. Regarding Indian areas in the US market, it was really mixed. Only Wipro closed negative, whereas as it is, all others closed marginally positive. If we calculate the arbitrage difference, then both banks still indicating 1% positive on the monthly basis, whereas both IT stocks were flat. About GIFT Nifty, the premium is behaving like a roller coaster. Day before yesterday, it dropped to 60 points. Yesterday, it again increased to 120 points. Anyway, at 3 AM Indian Standard Time, it closed at 21,766. If we consider 120 points premium, it's indicating a potential gap down of 20 to 30 points. So that's all about what happened on global market. Now let's discuss the India related info. First, yesterday FII turned net buyers. The net bought for 1,510 crore rupees, whereas for the third consecutive day, DIA was net sellers. The net sold for 1,390 crore rupees. Second, last night, rating agency ICRA released a report that Indian pharma industry for the financial year 2024 expect to increase by 9 to 11% on yearly basis. Here, I think this is positive for pharma sector since last year they haven't grown at all. However, ICRA rating highlighted some negativity that Indian pharma stocks were facing heavy price competition in US so not sure how market will take this. Third, in the last video, we did discuss what the investment firm Jefferies said about IT stocks and its impact on last Wednesday. Last night, another brokerage, Nuvama, gave the margin guidance for HCL. Here, they expect HCL's profit after tax expect to grow 10% quarter-on-quarter basis. 10% profit increase quarterly is very good. Let's hope market react positive to that. Finally, yesterday, Dauber Management in their business update said for the December quarter yearly basis, they expect the revenue to increase mid to high single digit only. Meaning it's somewhere between 5 to 9%, which is low for FMCG company. They cited the rural segment haven't picked up as it is in the urban. Historically, one FMCG company's negative business update did affected all the other company in those sector. So those who trade in FMCG stocks, please be cautious. As a summary, US market closed mixed and the global momentum is again paused. Increase of 10-year bond yield is always not good for IT stocks, but on the positive, ADR didn't react as much as negative like US tech stocks. And banks looks positive. For now, early morning, GIFT Nifty is indicating negative 20 to 30 points gap down opening. Moving on, yesterday as per stock open interest, Escorts Kubota, L&T Mindtree, Navin Fluorine, PVR Inox, TCS, Wipro, Tata Steel and Maruti Suzuki got an increase in open interest along with a negative close indicates the short build up. On the other hand, Alchem Lab, India Cements, L&T Tech, About India, ICICI Bank, Ramco Cement and Airtel got an increase in open interest with a positive price close indicating long build up. About the things to look out, at 10:30 am, India's service payment data for December month is due. Then at 12:30 pm, Germany's retail sales data is due. In the aftermarket hours, first immediately at 3:30 pm, Europe's consumer inflation is scheduled to release, and in the night for US, average hourly pay increase data, non-farm payroll addition data and unemployment rate are some of the items we need to keep an eye out today. Coming to technical, yesterday Nifty rebounded after 2 days of correction and almost recouped all the previous day Wednesday's losses by taking the support at 21,500 mark. Thus, on the daily chart, it forms a short green candle with minor upper and lower shadow. By combining the previous day, it forms a very close inside bar pattern. This quick recovery following 2 predominantly negative days indicates continued dominance by the buyers in the market. And also at present, the hourly momentum indicator has triggered a positive crossover, which is a buy signal. Thus, we can expect the positive momentum to continue. Hence, the more probable scenario for the short term is to project towards 21,800 to 21,850. If it surpasses 21,850, then we might anticipate a further climb towards 22,000. From yesterday, it looks like 21,500 is a very strong support as going forward. So, as long as it's above 21,500, market favors the buyers. In case of Bank Nifty, it also opened 100 points gap up and snapped a 4-day correction and more important, finally climbed above the 48,000 mark. Thus, on the daily chart, it formed a long green candlestick pattern with minor upper and lower shadow by substantial volume. At present, Bank Nifty is trading above all key moving averages and also it got the bullish crossover in RSI, all indicating the further positive momentum. In case of any pullback, it got the solid support at 47,700. So now, until 48,000 is not breached on the downside, we can expect the rally to continue. On the upside, we can expect 49,000 from the short-term perspective. Regarding options open interest, the maximum call option open interest was at 21,900 strike, followed by 21,700 and 21,800 with new call option writing at 21,900 strike and then 21,700. Thus, from options data, the resistance is present at 21,700 to 21,900 zone. Whereas on the put side, the maximum open interest was at 21,600 strike, followed by 21,500 and 21,000 with new put option writing at 21,600 strike and then 21,700. Hence, the immediate support is at 21,600 to 21,500 zone. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I am doing this for me and viewers for educational purpose only. Thanks for watching.